All right, welcome back. And we are watching a market that is gearing up for a lot of profit stories right now. Obviously, with the trade uncertainty, earnings season was seen as one of the tests of this recent rally, which has pushed stocks to all-time highs. Brian Mulberry is a senior client portfolio manager at Zacks Investment Management and joins us now. Brian, nice to have you with us. Okay, we're diving deep into earnings season so far. As you've been listening to what companies have had to say, what's been your takeaway?
Well, a lot like retail sales coming out this morning, a little better than expected. In other words, a lot of the bad things that were predicted in the April lows just simply haven't happened. So we've seen a pretty resilient earnings season from Q1. There were certainly softer expectations coming into Q2, but so far, and it's very early, just 1 week into it, we are seeing better than expected results.
And what do you make of the fact that the market has been ripping? I know we've had, hiccups along the way, but at the end of the day, we're basically in record territory. Usually that asks, invites the question for people, can it continue? What's been your assessment?
Yeah, I think that there are really strong companies out there, and they're showing that through their earnings performance, growing both revenues and profitability. But we're not seeing it across all of companies. So there are some stressful cracks that are out there. I think part of that is the fact that we've had interest rates higher for longer than the market expected, and that does put a drag on the value of future earnings. So it's not rosy everywhere, but the concentration of good companies is what's lifting the market. It is still buyer beware at this moment, and that means you don't want to own the entire market. You want to be pretty selective about what you're buying at this point in time.
Okay, can I use PepsiCo just as a quick example here, because the stock's moving in the pre-market? I think they're an interesting business because we talk about these big trends out there. One of the trends is more people around the world taking weight loss drugs, and that sort of invites the question for the snack giants, what does that mean for their business? It sounds like based on the results, they're trying to at least retool some of their product offerings and control costs. Any takeaways from a company like PepsiCo's results?
Well, yeah, I think you're seeing them pivot into something that will still be durable in terms of sales. They're going into more of the sports area, if you will, looking at high protein, low sugar type of snacks, fueling athletes and things of that nature, also helping to mitigate some of the decline in sales from the high sugar, high kind of carbohydrate type of snacks that they've had before. So they are pivoting, and they are looking for better beverage sales as well. Again, looking to support something along the lines of healthier consumption for consumers around the world. I don't think there's any doubt when you look across, the spectrum of snack food and fast food that those weight loss drugs are certainly having an impact on earnings at this point in time. And we're seeing Pepsi at least pivot into something. Excuse me. Pepsi is pivoting into a line of business that will keep their sales more durable.
Okay, let's also highlight that big airline in United reported quarterly results. Stock seemed to lose some momentum after a revised outlook. Now, there's a lot of components to a business like United, but I think a lot of people are trying to figure out, you talked about retail spending. I think a lot of people are trying to figure out what the consumer appetite to fly would be as well. Anything stand out to you with the United story that sort of might feed into the broader market themes?
Yeah, I think it's one of those where it was a pretty good quarter, better than expected, but the guidance was a little bit weak coming out of, the CEO, where they really just kind of hedged. They were uncertain about the next couple of quarters along those same lines, what the consumer behavior is going to look like. Really happy, obviously, that the passenger levels of passengers have been pretty stable over the last couple of quarters, but their forecast was not really solid. They weren't very confident. Just a juxtaposition with Pepsi, where they came out and raised guidance. They affirmed, hey, yes, we understand that are in a difficult spot. We're pivoting our business. United is doing okay, but they haven't really affirmed that guidance the way that some other CEOs have.
Okay. Now, when it comes to overall strategy right now, you would be leaning away from companies that might get caught up in all the tariff stuff we keep talking about. As for individual stocks that, you might use as examples of businesses that you like right now, a couple that caught my eye that you talked with our producer about, John Deere and Caterpillar. Any common themes there?
Well, really looking for just stable earnings growth and the amount of business investment just in the infrastructure around AI is something that's a really strong theme for us right now. It's where you're finding a lot of business investment. We're not going to get AI to grow unless we grow two things. That's the compute power, so that would be data centers, and then we obviously need more electricity to power those data centers. And so there's a lot, we're talking about hundreds of billions of dollars this year committed, and then more next year. So we're in roughly $1 trillion over the next 5 years in growing that infrastructure. So that looks like a really durable trend for the builders of those particular sites. And it's something that is dominating nationally and even internationally, where these types of companies, John Deere and Caterpillar, will be able to participate in those construction projects really for that next 3 to 5 year period. Their earnings look really solid.
Okay, there's Deere's stock, DE, Caterpillar's CAT, and actually another one that you had flagged is MCOR, which is EME, and they're a major contractor and a provider of electrical and mechanical construction. So I'm guessing that infrastructure theme, that an MCOR fits into that as well.
Yeah, it's really about getting the power into the data centers, really linking the electricity to the actual towers, if you will. MCOR is very specialized in that type of building and construction. Obviously, you've got these incredibly valuable, mainframe powers that you're trying to connect to electricity. MCOR has really dialed in their expertise on working with those types of data centers and projects. And so they really are in high demand for that skill set.